Hey guys, welcome back to the Traders Podcast. I am your interesting co-host CK, alongside my less interesting but very smart co-hosts Tara Slawi and Pops Ken. In today's topic, we're going to talk about challenges facing Forex trading in Kenya. And if you're new, our podcast here, the Traders Podcast, we focus on talking things related to financial and trading stuff. So that's the main thing we do here, just enlightening you with what we've learned so far, what we know in the industry, and sharing a few nuggets here and there. So that's me. We'll get started soon. Maybe Ken and Taras will introduce themselves, then we'll get started.
Hello traders, my name is Kenneth Manene. You can call me Ken, or rather you'll hear people call me Ken in the podcast. I'm a trader, I'm a founder of Financial Hub, and also I'm an author. I've written a book called A Template for Understanding the Forex Market. Today we'll be tackling challenges facing traders, including us. So we're basically this podcast is more of an exercise in thinking about what really stops us from attaining success and how we can be able to solve some of these problems. But mostly it's all about the awareness on some of the challenges. So that's it. Lawi can take it from me.
Greetings traders, my name is Tara Slawi. I work here at Financial Hub, co-founder, a risk manager, and also an author for a book called The Template for Understanding the Forex Market. So today, as Ken and Caleb has told you, we're going to talk about the challenges that are facing many Forex traders at the different levels. So stay tuned and enjoy the session.
Yeah, guys, so that's it from us. So we can get started. But before we get into that, just a few highlights since our last podcast. A lot has happened in the markets. We've seen Bitcoin.
Yeah,
Bitcoin has dropped.
Bitcoin drops about 40%, 30%.
Yeah, from all time. I think if you take the all-time highs, it's dropped about 50% because we went till what, $65,000
and something.
and we crashed till like 29,800.
Yeah.
Seriously?
Yeah.
It reached 29.
We reached 30 G's yesterday. It tapped 29.
It was blood in the markets.
Okay, I never knew that. I thought you go to
Yeah, like Dogecoin was down 50% on a day.
What, Dogecoin?
Yeah, Dogecoin was down 50%.
Yeah.
Ripple was down 30%. It's still down about, I think, relatively 27%. So it's blood in the crypto market. Ken, what's the reason?
China officially bans cryptos. So China no longer wants any payments in cryptos, no longer wants any exchanges in cryptos. China has done this before, I think back in
2017.
Yep, and we had the same effect in the market, right? So I think
a lot of panic selling.
Yep.
People staying on safe havens.
Yep. So a repeat of history. We saw gold jump a bit yesterday.
Yeah.
But a percentage or something, but we saw the market close significantly lower.
Yeah.
Oil moved down lower yesterday, about 3-4%.
About 5%, 4.9.
I don't know the close. We closed at
about 2% down.
Okay. So yeah. So there's a lot of volatility in the market. The VIX was up about 15% as of Tuesday the 17th or Wednesday. Wednesday the 18th of May.
19th.
Wednesday the 18th.
Wednesday was 19th.
For real?
Majama shule mko, dunia mko.
Anyway, so that's what's happening in the market. The dates are not really important. But we've seen a lot of volatility. That means opportunities. Markets are moving, Caleb. Are you?
Always moving. So I think it was a good discounted prices for people to get in yesterday if they're able to catch those drops.
Yeah.
A 50% drop is a good discounted price for people to get in.
I think by today morning, Bitcoin was up about 10% already. So the recovery is pretty quick.
Exactly. And you remember yesterday we were looking, Dogecoin fell all the way to $0.2 and it was back to around 0.4.
Yeah.
So if you bought it there, it would be the 100%.
Like seriously, this moves happened.
100% in hours.
Ken, where are you?
I was watching markets, but I never saw the big moves that you guys are talking
about.
The
pullbacks were pretty steep, I mean.
Yeah, but anyway, we've had interesting friends telling us we're still going to the moon. They don't know where to take the profits. Good luck to those people. But anyway, let's get into the topic.
You can't wish them luck, brother.
That's the only thing I can wish them. There's nothing else. They don't know what they're doing. But the best they can do for themselves is hope for the best. So, that's what has happened the past few weeks. I think apart from that, nothing crazy, nothing much in the financial markets. But apart from that,
I think stocks also dropped a bit.
Stocks dropped.
Dow had a fast a weekly close, bearish weekly close last week.
Mm-hmm.
So that's pretty.
So followed by this week.
Yeah, and I think it's cause about the inflation fears coming into the market. So I think probably, I don't know, but probably maybe it can be the start of a recession. I don't know.
So you think so?
Yeah.
I still think we're in a bullish run for some time.
I also think we're in a bullish run. Disagree with you there. I feel like as much as the inflation, I feel like this is the start actually of a recovery, the start of an economic boom historically. So we just came out of a recession due to the pumping. I don't know if we'll go back there. We'll see how the fundamentals develop. But today we're not talking about that, so we'll go back to the topic.
Challenges facing Forex trading in Kenya. So this has been a hot buzz. All the time we do about challenges facing Forex. I think that's there's a friend of mine who shared with me today morning that people like listening to a lot of pessimist stuff than optimist stuff.
That's true.
It's true.
That's true.
So if I tell you, Ken, if I tell you, let's say you want to do investments, you have 1 million Kenya shillings, and I tell you the upside is a lot, you can make about 5 million. You'll say, okay, you won't pay so much attention. But if I tell you can lose 500, half of that, your
brain is wired to be like that. So it's the negativity bias.
How do I lose 500,000?
Exactly. So you can pay a lot of attention to pessimist stories. So I think that's what follows with these challenges facing Forex trading in Kenya.
Yeah.
And people pay attention to that. But anyway, we've been in the industries now for about 5 years, and we've seen a lot, both from the beginner level, intermediate, and now we are interacting with a lot of professionals. So we'll break it down into those 3 categories and show you what different levels of trading you will face different challenges. So with that said, I'll get into the first one. Maybe for me, we'll do beginners, then finish all that, then intermediate.
I think it's also important to think about the individual and then think about the industry. I think there are different things in both levels. So there's the individual trader, what he struggles with. Then there's this industry, the whole industry, what we go through. So we can also break it down in that way, but you can start with the beginner, intermediate, then move to the professional level.
Okay, so first of all, what I think many beginners are facing as a challenge, which is why we exist today, is lack of proper education and guidance. Okay, so if we get into it, I think we lack a proper support system for the financial markets here in Kenya. There's a lot of easiness getting into the markets. We live in a world of instant gratification. So people go online, see people doing this. They forget the fact that this is a career. You need on average, about 3 to 4 years to understand first what you're doing before you start making substantial money. So that lack of proper education, people think it's easy. You'll see people online making money. I did this on my own. I'm making $1 million. All those, that's a lot of stories that I don't think is really at the core of it. I don't see any truth in it. Okay, this thing is hard. Okay, I'll be honest. It's quite challenging. It's been challenging to us. People at the professional level, it's still challenging to them. Last year we saw Ray Dalio losing how much?
About 15%.
15%, and he has a fund worth 160 billion, the biggest hedge fund.
100 million invested, trying to figure out where the market will go, but it still goes down 15%. Now you can think about the beginner.
Exactly. So that lack of proper education, I think that's what is lacking. And I think some people who are spoiling this as well, I think, is brokers. Brokers are the brokers in Kenya are really trying to fasten this thing and make it look quite easy for anyone. Look, brokers are here to make money. We've been talking about brokers before, and they're here to make money. So they come to you as the client, tell you to deposit some money. So they'll take you through 2 weeks, 3 weeks course.
3 days.
3 days.
Yeah. 3 days.
Even worse. A 3-day course showing you the basics of Forex. This is what it entails. This is how you buy and sell. But they don't get really deep into what Forex trading entails. And they make it look a bit simple. So people start trading eventually, or what was meant to happen, people end up losing money. So what do you guys think? That's
Okay, for me, on the topic of lack of proper knowledge and education, I think first it's an institutional problem. One, there's no college, there's no university. You'll go like a government body. You'll go to learn how to trade Forex. You see, if I want to be a doctor, I'll go to medicine school. If I want to be an engineer, I'll go to maybe an engineering school in one of the universities. trading is as important as medicine and engineering, actually more important than that. Personally, that's my belief. So first of all, like the fact that there is no institution for like a formal institution for Forex means that most people now will go into the underworld and try to do what is not right. I think if there was a system of education that someone knows after Form 4 I'll join this school to learn Forex, that would make this problem minimal. So I think that's one of the problems, that like the lack of a proper institution to teach Forex.
So I think to expound on I think for me the most important thing is the ease into getting into markets. I feel like if we could probably make it more difficult for someone to start trading, we could probably solve some of these problems. So like you guys just said, what normally happens is a person sees you making some money online, thinks they can replicate that easily, buys a book or two and starts trading with live money. That's real money being put into the markets. Eventually you lose everything because definitely you haven't learned how markets work. So you just jumped because it's easy to get into the markets. If you can be able to like come up with something that's more complex for people to start with, things will get easier. But again, if you think about the markets, I think I've really thought about it, and I feel like the free market system, which is how capitalism is built, I think every trader is a capitalist at heart, understands that if we again try to make it hard for people to come in, then we might again make it very, very difficult for markets to grow, for people to take advantage of those opportunities.
Yeah, okay, sorry to interrupt, but just to add on your point, markets need volume and volatility.
Exactly.
Markets need the full money.
Exactly.
Like,
the foolish money.
Yeah, exactly. If everyone is smart, exactly. If everyone is smart in the markets,
becomes very hard to make
for
money.
everyone to make money. So it needs like 95% of those dumb people to lose money for the 5% to make big money.
Exactly.
Because we have to understand that Forex and ultimately all this trading, it's a zero sum. Yeah,
it's a zero sum.
So money moves. Yeah. If someone loses, there's someone winning.
Exactly.
And of course, most people are losing, and the few people are winning. So yeah,
and winning a lot.
Winning. Yeah.
So yeah, that's basically what I'm saying. So again, if you think about it, I feel like now you need to, as an individual, you need to be wise around how you make decisions when you're going into the markets. So you really need to think about, why should I get into these things easily? Like if something looks so attractive, there's a trap somewhere. There's a trap somewhere around it. So you really need to figure out a way to come in being guided by someone, or you'll decide to at least do some good research before you start trading.
Yeah.
In Chat with Traders, we had a trader who did research for about 2 years without trading. Exactly. Just doing research, trying to figure out what's working, what doesn't work, how markets work, what
learning
people win.
Exactly.
And then you start trading. But now if you do the reverse, you start trading, then you go back and learn, which is what we did. We are telling you the mistakes we did.
Yeah.
You lose a lot of money in that process. So first of all, try to do your research, understand what works in the market, what doesn't work, and then you can come into it. Just don't be fooled by the easiness of getting into the markets. The brokers who will keep on calling you and telling you need to deposit some money, you need to start trading, you need to do this and this for you to probably make progress or make some money. That's a lie. You can't learn trading in 3 days, 1 year, 2 years. It will take an average of about 3 to 5 years, which is what Caleb said. And that also depends on whether you're being guided by someone. Actually, Dr. Brett said, for those who are in the prop firms, so Dr. Brett is a trading psychologist. He works with prop firms. So prop firms are hedge funds, or prop firms it's a firm which basically manages capital and gives capital to traders for traders to manage. So Dr. Brett is now a psychologist to some of these traders, and he says that he has observed that even those traders who have the capital for them to learn, the resources for them to learn, the guidance of some of the best minds in trading, still take an average of about 3 to 5 years to grasp fully what it means to trade markets. So if you're a beginner and you're doing it alone in your house, you don't have any of these things, then you should probably double or triple that time, and then you'll understand how long it will take you before you can be able to make any money in the markets, especially consistently. So I think you really need to be keen on that. We really need to be keen on that when we are going into the markets. Yeah,
and I think the next thing we can talk about, another challenge is for beginners. It's something I was teaching a student the other day. I hadn't really taught it to another class, but I was teaching in terms of just showing the reality of trading in in itself. So what it was time and returns are misunderstood.
Yeah.
By time, what I mean, this is like any other career. It'll take a lot of time for you to understand.
Uh-huh.
But in Forex, somehow people, they change it upside down. They think since it's dealing with money, I can do this in less than a month. Okay, so it's totally misunderstood. Returns, on the other hand, is also misunderstood in the fact that someone wants to get into the markets and consistently double or triple money.
Yeah.
Okay, so that's another problem that I think is understood. And I think what is act as a catalyst to the returns
Yeah.
is the problem that luck. I was talking with Taras the other day. Luck plays a very significant role in trading.
Yeah.
Okay, the fact that the easiness, what we've just talked about, easiness to come into the markets. You have some money, you deposit in it. You don't know what you're doing. You get into a trade, you buy and sell. You don't know what you did. You take a huge position, and luck acts in your favor, like what you guys talked about in the previous podcast. Tripling your $300 to $1,200.
Yeah.
That was
So
pure luck.
That was pure. You didn't understand nothing.
But I think it's important for us to expound on why there is the luck factor.
Mhm.
Anyone who starts out in trading can only do two things. You can either buy or sell.
Exactly.
So as you start out, you already have
No
a
other option.
50% chance of being right or
or
making
wrong.
money.
Yeah.
Mhm.
So you can make money
Mhm.
without knowing anything.
So
Because you
basically
can
we
either
can
buy
say
or sell.
at the beginner level, it's pure gambling.
Pure gambling because you
Yeah.
don't know anything.
Mhm.
Yeah.
True.
And it can work for 1 trade, 2 trades, 10 trades.
Mhm.
But in 100 trades, you're a loser. Big
Exactly.
loser.
And what happens on the first two, and I don't know why these markets give so much luck, but anyway, you get in, you buy, maybe buy gold, all of a sudden you triple your money.
Yeah.
So that already is ingrained in your mind, and you think, this is how it works. Then now it takes a lot of time for you to unlearn that
Yeah.
Exactly.
and come to understand that the market doesn't work like
And
this.
that's the danger. That's the danger.
Yeah.
Learning bad habits,
Then
Mhm.
taking
having
time
to unlearn. That's the danger. That's the danger now.
Exactly. That's why Ken was even talking. If you don't have someone to guide you to someone who's doing something right, then you, my friend, will do a lot of things that will need a lot of unlearning. And we've seen such people come into the office. You've seen someone comes, they're telling us, the guys like the one we talked in the previous podcast, we didn't get deep into it, but the guy who got to 4 million and who was trading for the other guy,
Uh-huh.
such a person, he believes he's doing the right thing.
Yeah.
He had-
Yeah, like he knows his mistake is just one
One thing. And everything is wrong, actually.
everything is
Everything is
wrong.
wrong,
From structure up down is wrong. So
Yeah.
Exactly. As in, he doesn't have a method. If you tell him to explain to you how he got these returns, he just took some crazy trades. I don't remember deeply what he took, but there's that luck. Luck was playing a lot of role. So he thinks he's actually. So now you confuse skill
yeah.
with luck.
Yeah.
You think you're skillful in something you're not skillful at all. You don't know. And this is what it was in my other point, Dunning-Kruger effect.
Yeah.
Yeah.
So for those people who don't know what Dunning-Kruger effect, it's basically the process where you get into a new topic or a new field, you get to read a little, then you think you know a lot, and you start using that practically, when in real sense you actually know nothing. So it's normally a curve. So you get from 0 to 100 real quick. You think you know a lot, you come into so let's use Forex for example, 0 to 100, like what us we did starting off. We started off very early. We went 0 to 100, we tripled our money, we thought we knew what we were doing. All of a sudden the curve changes, we go back to 0. Okay, so back to 0 is where now this market filters everyone. It filters those people who want to do this seriously. It filters the people who are not looking to take this as a career, the people who are looking for a quick buck here and there, people who are looking to make money to pay rent and all that. So there's a huge disparity. There's a big line. There's no thin line between trading failing and trading success. There's no thin line here.
Yeah,
it's a
thick
huge,
line.
big River Nile line that will take years to cross. It's so hard. So this is the problem that we're talking about. That's called Dunning-Kruger effect. You know so little, you think you know so much because of your mind. You're so little, you're not out there to understand what's out there. Then you start using that knowledge. Later on, you discover, oh shit, I know nothing. Then that's where now the process starts. That's where the journey begins. So yeah, that's my point.
On your point on time
Yeah.
and returns
Yes,
being
yes.
misunderstood,
Uh-huh.
I think I have a very important point on returns.
Mhm.
So first of all,
Returns or time?
returns.
Okay.
In trading, most new traders really don't understand returns in trading. So for a new trader, let's say he joins into the market with $100. You tell this guy, or you're trying to teach him, that a 10% return monthly is enough and sufficient. what is 10% of
Great
$100?
return.
Yeah, great return.
Per month.
Yeah, per month. What is 10% of $100?
10% of $100.
Yeah, it's $10. You see, so this guy has $100, and then that month he makes only $10. You see, that's 1,000 Kenya shillings. So he sees it's too little for him to even survive or do so he thinks he now needs to make about 100% to make at least 10K that month. You see, so if you tell this guy just be patient and move with that 10%, it can't work for him. There's no way someone will work so hard,
$10 per month,
analyze markets every week to week for a whole month to make 1,000 shillings. He sees that's a joke. Okay, even for $1,000, that guy will make only
$100.
Yeah, $100. You see, bro, you have 100,000 Kenya shillings, and you're only making 10K per month. You see, so this guy says, nah, these returns are too little. So he'll subconsciously he'll want to he'll do things to make more returns. So he'll maybe trade more, use bigger lot sizes just to make about from $100 he wants to make about 5,000. So you see, basically he's not understanding the idea of returns. So a 10% return for someone having $1 million, what's that?
That's 100 million Kenya shillings.
Imagine. So 100 million Kenya shillings. So
10%
of that,
10 million Kenya shillings.
10 million Kenya shillings.
$100,000.
Yeah. So you see, someone can easily make 10%, make 10 million Kenya shillings just from 10%. So I think the fact that most people don't understand that trading is a big money game, that's where the problem comes in. You come in with $1,000, even $10,000. You make 10%, that's 100K. So someone says, hey, I have $1 million shillings, but hey, 100K is too little. You see? Yeah. So I think that's the problem with returns. Like we have, I think it's a misconception about returns. So if we can work something against that, maybe trading will get easier.
Over time.
Yeah, over time.
I think to build on to what Lawi just said, I think the third point we should talk about is lack of capital. Capital.
So there's lack of capital and insufficient.
All of them, you don't have capital. You basically don't have money. Anyway, trading is a big money game. If you have anything less than $50,000 in your account, which is about 5 million shillings, you can't trade for a living, man.
Yeah,
you can't. Because this will force you into two things. One, you look for great returns, like Lawi said, and forget that great returns is not 40% in a month or 50%. That's great return in a year. Actually, good return in relation to risk is about 5%, 3%, 6%. If you can do that consistently, trust me, you'll be rich because capital will flow into your hands. So many people forget the aspect of capital flowing into their hands over time and focus on trying to make so much money from very little cash.
So little time. Like
exactly. In so little time. So you're doing everything in the wrong way. One, you have $500. You want to make 10,000 out of this $500 and you want to make it in a month. Okay. So how much risk are you taking per trade for you to make? Because I think $100 is about 20% return or something.
On how much?
On $500.
Yeah.
That's 20%, right? So you're trying to generate 20%. That means you're taking risk of about,
let's say 10%. If this guy has a risk of 1:2. Yeah.
And that means if you have 3-4 losing months in a row,
you're down half. Your account is down half.
You're out of business. So So you really need to sit down and think hard about where you'll get money. And that adds up to the next point, lack of a career plan. But those two, I think, will have them connected. We'll expound more on how you can solve both. Yeah. So I think for me, if you have less than 50,000, okay, in Kenya, if you have 10,000, 20,000 and you're trading well, maybe you can survive.
You're talking dollars?
No. Dollars, not shillings.
Yeah, be specific.
Okay. A question on average. Yeah. Like what amount does the beginner trader begin with in Kenya?
On average?
It's about $200, $100. Exactly, $150.
Those guys are like you're waiting for doom. Like trust me, you will not.
And I think that's why now they look for, which is another point to add on, signals, or rather a system that can give them
$50 and you're looking for signals.
Serious?
And you buy signals for $50 again.
Because now they're looking for a system, or they're trying to perfect a system, or look for a system that gives them more wins than losses.
Yeah.
Which is hard to find.
And also, I think the problem with that is because also on YouTube, you see, social media, like you go to YouTube, you see a caption, how I made $20,000 from $200.
From $5.
That's a lie. It's a lie. No one does that.
So like someone is on YouTube, he sees this guy's analyzing markets, making money. Of course, I think maybe he has a Mercedes there. So that guy is convinced, like, hey, with my $200, if I do some magic here and there, I can also make $20,000 like the other guy. So it doesn't work like that. Those guys are con men.
That's a good word. A con man. It's a fraudster.
Yeah, if someone tells you he made $200, let's say $20,000 from anything less than $10,000, guys are con man.
Toroka.
Hey, Toroka was like, hey, pick your shoes and run fast.
Yeah, because like what Ken was saying, if you let's be realistic. So you want to take you're trading for a living. Let's say if you have $50,000, why did we take that number? Because if you're looking for, let's say, $50,000, that's 5 million.
5 million, yeah.
5 million.
Even if you make 1% return in a month, that's how much?
That's
About
$500.
$500.
Here in Kenya, at least if you're a bachelor, a single man, single lady, you can survive on that.
Yeah.
Like a nice bedroom. That you've not even struggled really much in the market. You've just 1%, okay?
Yep.
So now you're starting to trade for a living. If you can, let's say, make 5%, that's about 250.
250K.
Yeah.
Now that's good. And you're not looking for outsized returns.
At
Especially
250, you're living the life in
that's
Kenya.
what I was going
man.
to say. If you're getting to 50 a month in Kenya, 100 G's and above, you're living a good lifestyle.
Yeah.
Especially if you're not those type of people to start, okay, I have 250,000, you're already living in a 200,000 house.
That's bullshit.
Let's
That
be,
doesn't add up.
Yeah.
you have to be a proper investor, understand how these things work, okay? So yeah, that's what I was going to say. So if you're trading for a living and you're not, let's say now you have that $1,000,
$1,000. You can't trade for a living.
which
with
is 100,000, which even many people in Kenya don't even start with.
Because even if
And
you make 20%, bro, that's
You have 20,000 Kenya shillings,
Yeah.
$200, and you're trying to
315.
live on that.
You're trying to
In
live
this
on that.
Nairobi.
20% in Nairobi. And 20%, you're one of the greatest traders.
Exactly.
You're a
Come
great
on.
trader.
Great
so-
trader. If you're consistently making
Because
that 20%.
SIB made what 2019? I don't know
think
from
24,
2020. They made 24%,
yeah.
a whole year, and you're trying. Man, understand how these markets work. Do research. Understand.
And
Yeah.
also, it's evident how much do banks give annually. Why do people think trading is magical?
People
Because
don't understand
banks give about the best interest is about 9%, 7%.
Well, on savings, fixed
Yeah,
income.
Yeah,
fixed
yeah.
income, yeah.
Annually, bro. Annually, 7%. And this guy, he thinks trading. See, banks would be multiplying all this. Like, if banks trade, right?
Yeah.
And they're giving that 7% annually.
Yeah.
Why do you think? If banks trade and they are making 300, 400%, why would they give you 7%? So that shows you even banks, if with their trading, they make only about, let's say, 10 to 15% annually. So I think on returns, we really, really need to be to unlearn a lot, like to teach people about understanding the importance of understanding returns.
Yeah.
Yeah.
And being patient to wait for those returns to
Yeah.
come.
First of all, in trading, the goal is first, as Gitosh was saying, take time to develop the system.
Yep.
Yeah. Don't think about money.
Your
the first-
$1,000, you're not supposed to make any money. You're
Yeah, for the
supposed to
first
master
3 to
the
5
process.
years, just focus on developing the system. The money will come. So, yeah, Caleb, you can go on.
But many people don't think about trading in the context of I'm doing this for 10 years or for 15 years.
Yeah.
Many people come into it with the idea that I'm going into this to make as much money as I can in the shortest time possible, and then I leave and do something else.
Yeah.
They just think there's money somewhere. Just
There's-
go pick it up.
Exactly. Nimeambiwa hii kitu iko na do. That's how people join trading. Nimeambiwa hii kitu iko na do. Ama nimeona huko IG.
Huko South Africa, watu wako na
Watu wana
BMW.
ball
Especially
BMW.
South Africa, some young boys.
GTI. Most of these people, first of all, if they're trading successfully, understand they have capital of 100,000 plus. That's one.
Dollars.
If they don't have that, they're making much of their money from education, not
And signals.
trading.
And
Exactly,
signals.
and signals.
Mm.
Number 3, if they're doing it well and they have the 100,000, it's taken them over 5 or 6 years to get there. It was not a 1-year trip or a 2-year journey.
Yeah.
If you do your research, go into the background, you find that most of these people started trading at a very early age, like at 16, 17. Because in South Africa, again, they have the advantage of the white people, right?
Yeah,
So the whites there brought trading, made it easier. There were many people who were doing it successfully again already. So it was quite easy for the blacks there to replicate it from the whites who were already doing it and get some guidance and some capital also to flow to their hands. Because I feel like if a trader, if we like Kitosh does now, like if you have like other 5-6 traders who are willing to part with their cash to give to traders who understand the process, the risks, the stages, all these things, then we can open up the industry a bit more. Because we are opening it up with the brokers. Because I also feel like as much as brokers are doing a shoddy job, at least telling people there's some opportunities here. If you can probably sit down and organize yourself and be patient and have a plan, you can probably make something out of this rather than just staying idle, unemployed or something. But where they're going wrong is to tell people that they can do that in 3 days or 4 days. So that's the big lie. That's the big lie. If they peddle the same information they're doing but tell people, listen, it will take you 3 years, 4 years, 5 years for you to master this thing.
Like a normal course.
So be patient. If you want to do something for a living, look for something else that can give you some cash on a day-to-day basis or something. Or understand that you'll have to live as a minimalist for a couple of years first before you can make any money. So if we had such red flags already, if we told people the truth, if the brokers decided to peddle the truth, then things will flow.
Do you think
faster.
They can peddle the truth?
No, because if they do that again, no one will join.
one will join,
Exactly.
yeah.
So if you tell people the truth, there's a high chance they won't join trading. And that's the bad thing. So that's why for us, we've been so slow again in recruiting people, because you tell people the truth. If you tell people,
don't marinate.
we won't lie to you. Even in this podcast, we're talking the truth. So that's why it will take some time, but I think ultimately the truth wins. So
and I think that's where we come in as a company, as Financial Hub, to at least, because trust me, these are our friends, like our family members, like people who come to us, like most of them, they're our age mates, right? So at least we want to, with our 4 years, 5 years experience. Of course, we don't have 20 years experience, but we have some knowledge which we can guide you on the best way to maneuver the industry. See, it's not that we've made the greatest returns in Kenya, but we're just here to give you guidance, like to show you this is the right path, this is the wrong path. Avoid this, take this path, do this, do not do that. And maybe if you become resilient and push for it, maybe trading will work for you.
Takes time.
Takes a
lot.
And the other thing, just you highlighted a bit of it, social media.
Wow.
And instant gratification.
Wow.
We live in a world of instant gratification. Where,
Caleb, you remember showing me the guy who was driving a Bentley?
Which guy?
The guy in US.
Q-Banks?
No, not Q-Banks. There's this other guy. No, when we were starting to trade. The guy was trading options. Some kafat guy. I think he was called Robert or something.
Oh yeah, the black guy.
The black guy.
Oh yeah, I remember. I don't remember his name.
Exactly. So we watched this guy. We were in a bed sitter and we thought we'd also whip Bentleys soon. I decided
that guy was in McDonald's. Quickly got into trading and worked his way up.
So social media has lied to you guys. If you go to any of our pages, I don't think you'll think any of us is traders. Traders. Exactly. You won't even imagine that any one of us does trading for a living. Why? Because none of us has peddled
the wrong
image.
Information.
Exactly. So we have tried to shun away from that. As much as we may post profits and losses and such things, we are very, very keen to show you that some of these things will happen.
And these things is easy. It's easy. We can go, we have an office, we can post the way we are making a lot of money, funding students. It's easy to do this stuff, but it's not the truth. And it's far away from the truth. And part of our culture is transparency. Because we need for the long term. If you say short term, then you come and learn a few things and there you understand that actually I scammed you. You'll go tell another person who'll tell another person. It won't work. So part of our thing is
and you've seen people do that and fail very fast. I think we should also expound on that. Because I've seen multiple companies come in, lie to people they bought cars using Forex and they've lived their life and they're making this big amount of cash. Exactly.
Especially in Kenya,
they
posting, I bought a car. There's someone who came to the office, a student of mine, and he's actually telling me, there's this guy, he bought a car with Forex, he's young. I was like, I know those guys, and there's nothing like that. Achana no story. There's nothing.
Rich traders are very, very
Calm.
low-key.
Yeah,
Very,
low-key,
very low-key.
humble.
Humble, rational. The market has humbled them. They're very rational people. So
Yeah.
it's a
You know
very
this money
different
can
thing.
come and go.
Exactly.
It's all a matter of probabilities and risk management.
Thank you.
Yeah.
So
So social media has destroyed the forex industry. I don't know why.
And it's not even about
It's not even destroyed
Forex.
things like medicine.
Not
and-
even about Forex. Just social media in general. Social media has too much pressure. In
exactly.
itself.
Exactly. In life,
Yeah,
by the
yeah,
way,
in
we
life,
shouldn't
it
even
has
focus
too
on
much,
trading
yeah,
only.
Too much pressure. Like you
Yeah.
see your friends.
Mhm.
No
Outs.
job, no job, no nothing. But he's balling in Bali.
Making tunes.
Yeah, making tunes. Like, please just focus on yourself.
People can't.
Yeah.
It's very hard. Look, this world we live in, if you get really into the core of it and look at it, most of the decisions we make is not our decisions.
Yeah.
Like if you think of it deeply, like there's this, the thing that Apple is trying to remove, the app tracking stuff, the one that different companies use your app to track different stuff. So the thing about that, they're able to track what you do in different apps so that when they use advertisement, they know how to target you. So for example, I don't search much about food. So I'll never get any advertisement on food and all that. But I do a lot on Forex, financial stuff. So I'll get a lot of Centonomy, those things. I'll get a lot of advertisement on that.
Yeah.
So basically, you think you have control of your world, but deep down subconsciously, a lot of your decisions are being made by the big people up there. And if you really understand that, you'll really understand that this social media is just all a con in
Plus
itself.
in social media, as I said last time, like no one posts the bad picture of their side.
actually,
Everyone
to
has a
add
bad
on to that,
picture.
Yuval, who is a historian, was actually saying,
Yeah.
if you go to your page, you may think you're happier than you are in real life. Like you yourself will be fooled
You
into
want to be
thinking
that person.
exactly.
It's your page. It's your own page.
It's your own page, but you think, hey, I'm very happy, man. I'm living the life.
Hey, but deep
But
down,
deep down, like no one is even aware of what's really happening.
people are depressed.
Exactly.
People are broke. People are.
So if you really focus on showing
Fine.
people what you have or looking at what people have,
Yeah.
then you're very, very wrong. And also I feel like that's wrong fundamentally because
Mm-hmm.
one thing I've learned now after thinking about it and reflecting so much is I can't even compare myself to Lawi. And I think trading has also taught me that I can't compare myself to Lawi or to Caleb.
Mm-hmm.
Because the challenges I have or my subconscious is built up on very many experiences which none of you can replicate.
I've known you for only about 4 or 5 years.
Exactly.
Mm-hmm.
So I already have like 20 years of baggage in me.
That
So
I know
that
nothing about.
Exactly.
Mm-hmm.
So there's no way absolutely that I can compare myself to anyone.
Mm-hmm.
Like how I live, how I do it, how I make decisions. Everything is individuated to some point.
Mm-hmm.
So anytime I even the impulse comes to compare myself with someone, I'm very quick to remind myself that life doesn't work that way.
That's right.
What I'm seeing is a tip of the iceberg.
Mm-hmm.
What you have down there is deep stuff. So
A lot of depression,
a
hard
lot
stuff,
of
milestones,
exactly
family
family
pressure,
pressure,
work,
you have a lot of garbage. So fix your garbage.
trauma.
Exactly.
Yeah,
when
true.
you try to go through your own shit alone, it will help you more.
Just life advice. If someone tells you, I understand you.
Nakuelewa sana.
Run away. Well, maybe they're trying. It's not that they have the worst in heart for you, but
Yeah.
we are our own enigma.
Yeah.
It's even hard to understand. It's like sometimes we'll make a decision or some action and be like, how did I do that? That wasn't me.
Exactly.
You see me.
Yeah, you don't even understand yourself.
You don't, and that's why now we love trading, because you see, in trading, the outcome of a certain action will give you feedback of how you are immediately.
Immediate feedback.
Immediate feedback. So, for example, if let's say Bitcoin is going up, it's at 60,000. I'm like, yo, I need to be in this thing. That's the same thing McMill did on Dogecoin. He jumped into this thing at the top. So you're just feeling like,
And he's lost 25,000 already.
He's lost too. He's lost like 50%. So you want to get into this thing as quick as possible. So in Forex, the good thing is there's immediate feedback. If you do that, then you lose money, like what we're talking about McMill. There's immediate feedback that you did something wrong. And if you don't work on it and if you're not aware of it, you cannot progress. So the hard work now is to get that root cause and try and figure it out and change it. So that's why now trading comes and helps you. That in life generally, not just in trading, but in life. And this is really deep. I think many people who understand these philosophical points are people who are trading and people who have been doing it for some time. Trading in itself changes your whole life, the way you think, the way you act. You're aware of yourself because you're aware when you're angry, when you're fearful, when you're greedy, when you're hopeful. Hopeful is not a strategy in the markets. Get that out of the way. You have to be very objective and rational. But so social media has destroyed this world in general. Like what Ken said, it's not just in Forex, in general. But that's the points on social media.
I think we can jump into the mental challenge of trading. So I think one is the isolation. So if you're trying to learn and people around you don't understand what you're trying to do. So I remember back when I was learning how to trade, I think I told my dad that, there are people who are managing over 10 million using, and my dad was like, you want to tell me there's someone who's seated somewhere using 10 million and a laptop and is making over 400,000 in a day?
Get out of
here. I tell them, that's what, and they can't believe it. They think I'm mad. They think like there's that pressure that comes from your folks not understanding what you're doing, from the people around you not understanding what's this. So that's one. Trading is a lonely job. I think if you don't have traders around you, it can be a very, very lonely job. And besides it being a lonely job, add on to that the losses, the frustration, the account blow-ups. Because I think I've seen people come to the office and they tell me trading has made them depressed. That's a risk. Trading can make you depressed. It can make you addicted. You can lose all your cash in a cycle of doom, and you're losing money and you don't even understand why you're losing money.
That's the problem.
You're losing and you don't understand why you're losing. So first of all, I think it's very important for us to talk about that mental challenge, especially in these early days in Kenya where people don't even know what trading is, how it works, how you can... There are people who have actually raised money from people, lost it all. And now you're having the challenge of people are after you. You've lost all the cash. They don't even understand why you lost it. Because I remember there was someone who came to the office and said they had given someone about 60,000 to trade for them. And this people... No, 60,000 shillings.
Okay.
So, and this person lost all the cash. So, the one who had given out the money calls this person and tells them, okay, in your contract, there's nowhere where you're written there's losing. And you can imagine now the struggle that this person who had drafted the contract now has to go through. Because in real sense, in trading, there's a risk, a very, very big risk that you'll lose money. And you have not factored it in. Then you're putting yourself in pressure. And for the newbie, he does not understand that there's a risk they lose all the money. So you really have to be cautious. You really need to think about the mental challenge of trading and think about how you'll navigate that all the way to where you can achieve mastery.
So I think on the mental challenges, I think it's because, one, we all come into trading with the idea that it'll be easy, I'll make money fast. So that realization that, shit, so I have to again take time, focus. So that immediatally it's fucking up your mind because it's not what you had planned for when you came into it. You see, so the fact that now mentally you are planning on how you're going to be rich in 6 months or 3 months, buy your Bentley, go to Dubai, do shit. So then it's 2 years later.
You have nothing.
You have nothing
down the line.
2 years down, and you've been resilient into the game. You've not given up yet, and it's 2 years later. Still your trading is not solid. You've not system is not perfect. Still facing lack of capital. Probably you've blown a lot of accounts, family money, friends money, investors money. You see, so it comes with a lot of mental challenges, and I think that's why hedge funds, good trading institutions have psychologists. Because trading, it fuck ups your mind. You easily get depressed, and depression happens to almost everyone.
We all have depressive episodes.
Everyone has depressive episodes. So for trading, for a trader, for the first 1, 2, 3 years, trust me, most traders were depressed. I was depressed. So
losing
money, losing friends' money, family money.
No one understands
you're broke, no one understands you. You are trying to raise another capital to trade, because if you're not trading, you're not learning, you see. So it's just a lot of pressure mentally, and you're alone. Let's say you don't have a team. At least us, we're 3. Most people are alone in their houses. They don't know, like, they love trading, yes, but now there's no formula of how they move to the next stage. So I think it comes with a lot of mental pressure. And if I think my advice for traders is just be patient, become the moment you've removed that instant gratification mind thought from your mind, it gets easier for you. Like, now it becomes like a passion, you see. You can do it even without earning. So I think that is one thing that can maybe help most traders maneuver the mental challenges. And we've not talked about mental challenges of trading. Like,
We've not even gone into, like, you're now managing big money. Because if you have 100,000, you still have the challenge of you could lose cash. There's the risk of falling short. There's the risk of your system not working in the certain market conditions. All those are psychological challenges. We're just talking about the ones you face when you're starting out. So those are very, very different. So you really need to, like, sit down and think about it. And I think human nature is also something that really fucks us up. Because I was actually thinking about, like, from a philosophical standpoint, like, if Lawi blows an account today and comes to me, I'll tell him, it's normal. It happens in trading. Everyone has blown an account at some point. You really have to be resilient. But if I blew the account myself, the mental torture that I'll take myself through is quite different from it's very hard for me to tell myself, this is normal. Everyone does this. So if you think about it, human nature also makes it very hard for someone to survive in trading, because there's that mental torture that you take yourself through. And now if you don't have someone to, like, share your story with or tell them what you're going through, then it becomes very difficult even for you to come back even into the game. Because everyone, I think, who's traded at some point had decided, no, I'm not going to look at this laptop again. And puts it aside. Exactly. Like, I'm not going to look at markets. I'm just going to stay away from this thing, do something else. But naturally, you feel drawn back to the game after some time. So I think also time heals. So probably that's something.
And the mental part for especially if you're not trading your money. Let's say you've borrowed money. Like you remember the student who came who traded his mother's money?
Which one?
This one who just finished his classes.
Oh, okay.
I don't mention names, but
I remember,
he traded his mother's money. Blew all of it. Tried recouping it, and in that process lost more. At first he had tripled. You remember?
He got into not tripled. He'd made about a 600% return, all the way to about 6,000 USD.
From 1,000,
From 1,000, Then
and
went back
all of it back into the markets.
Zero.
So that also messes up with your mind. Like you're trying to reach a certain target. One, it's not your money, so you're not mentally stable at first, because if you lose this money, like that person was trading his mother's money, you don't know if you can be chased out of the house. You don't know what's next. So you're sort of, and especially after you blow, now that messes up with your mind psychologically. When you get another money, now you don't know how to go ahead with it. So you sort of have this sort of recency bias.
Just they're trading
exactly. You have this recency bias. Now what happens? You go from opposite, taking crazy stupid returns, to risking too little. Now
and now when you're risking too little, you make nothing.
Now you don't want to blow the whole money. You understood that you can blow money, so you've understood that part, which is a good lesson. A very, very good lesson that cost you $6,000 just to understand that you can blow up all your money. Then now from there is now understanding the game properly. Knowing the line where to put into proper risk. Now different position sizing, all that. Now that one is deeper. We'll talk about it later on, but mental game is the main thing. Learning this thing, looking at the charts, is the easy part. That's easy. Going through our book is easy. You can say I've understood that. But understanding trading at its core needs you to understand how the game works, and mainly to understand the main demon, which is you. Understand yourself fully. Know that I'm irrational. How can I work on that? And all that. But that's a topic. We'll talk about it on emotions of trading in another topic. So I think we've covered most of the... another main thing we can talk about is maybe a lack of focus on one thing.
Yeah.
Yeah.
I think beginners really face that. You remember the guy who came, Mr. Dataras? He said, "Well, I'm a jack."
Of all trades.
So he's trying to trade. He has businesses
Yes,
running
businesses
all over.
Some people in school,
Exactly.
internship, trading. Hey,
Yeah,
you're
some
doing
people
a
come
lot
and
of
ask us,
shit.
"Can I do this part time, man? This is a career."
Yeah, like a
If
career.
you're a doctor, you're not going to do doctor part time. If you're called anytime a patient is sick, you need to pull up. Same thing with trading. If you have to be on the job
like you need to focus on
24/7.
it. Yeah.
Exactly. It needs a lot of focus, and people lack that. Luckily, us were able to.
Jesse Livermore says,
Yeah.
Who's
Jesse Livermore?
Jesse Livermore is one of, I think, the greatest trader of all times. One of the greatest.
Speculator.
Yeah, speculator of all times. He like early 90s. He traded the 1907 crash, 1914 crash, 1929 crash, making millions. That guy, I think, was at a point he was one of the richest people in the world. So that guy, I think he says, a speculator has to be on his job 24/7. Like,
or he'll have no job to be on.
Exactly. He'll have no job to be on. That guy was going on holidays. Then he sees a newspaper. Then on the newspaper, there's that stocks part.
The time is on a yacht.
Yeah, in a yacht. So he sees, hey, Dow is at this point. He closes his vacation. Goes back to New York to trade.
All the way from London.
Yeah, man. So a trader has to be on his job 24/7. And I think that's why people think it's obsessive, not to over trade, but to trading has a lot of things to back test, to journal, to analyze, to take the trades, to manage the trades. So
Advanced self-review.
Exactly. Like most of the times you'll just be on your machine, or maybe writing or learning. So
reading.
Yeah, you always have to be like, you have to focus a lot. Like trading is not just about buying and selling. Yeah, so it has a lot of shit to do. Like it will take you a lot of your day's time to just handle what you have to do about trading on that single day. So I think focus is very important. If you don't have focus, this game will easily beat you. So,
and I think as we figured out earlier on, that's why we dropped out.
Yeah,
kept everything aside. Like I think I mentioned it a bit. I don't know if it was in this podcast or the previous one. When I said after EDMI, and I was balancing the two. I was doing a lot of film, so I'm trying to upgrade my skill or learn more because I love film and TV, videography. It's a passion of mine. So I'm trying to balance that. I'm entering into film competitions. I'm shooting stuff. And on the other side, I'm doing trading. Now, both of these take a lot of energy and time, okay? Because personally, I like doing things intensively. I'm not a 50-50 person. Okay, let me get halfway. Liwe liwalo. Like, if you want to do something, do it and do it good. So now I was trying to do videography quite well. I was trying to do trading quite well. Now what happened after that, there's a day I just felt sick. I became fatigued. I couldn't move. I was totally sick. And that's the time I realized over here, you have to focus on one thing. Film is not going anywhere. Let me learn this skill which can give me some financial freedom. And then later on, I'll come back to the videography and all that. So we dropped out of school, dropped everything with videography. My friends were telling me, Caleb, you're talented in this. Why are you not doing this? But I told them I have a different plan. I'm doing what I know is right for me at that time. So far it's paid off. It's good. We focused. It's the only thing we do. It's what we do full time. There's nothing else to do. And the opportunities that this industry has opened is limitless. And it's still opening so many doors into the future. Like we can't even put it into words, and it's actually beneficial for us. So I think focus. If you're able to focus on one thing and just do that one thing on its own.
Yeah, and I think it's not only in trading. In whatever industry you're in, focus is very important. Messi and Ronaldo did not become overnight successful footballers. They focused on it. They practiced day by day. And trading is a professional. Like it's a performance
field.
Yeah, field.
Exactly. It's like a sport.
It's like a sport. LeBron does not have any other job. He trains every day. You see, maybe just one gig to advertise here and there, but the primary job of that guy is to train for basketball. So, and he's one of the best people, and still training every day. So that's why in trading you have to always be on the game.
Even if you're
Yeah.
at the top of your game.
Yeah, like Gitosh is always in the office, even on Sunday.
And he's been in this industry for
13 years.
14 years.
Yeah, so focus is very important if you really want to.
You cannot discount it for anything. Be on the job 24/7, or you'll have no
job to be on.
So yeah, so that's the point on what was it? Focus.
Yeah.
I think what we can talk about is the intermediates now.
Intermediates.
Those were mainly beginner points, people who are
points,
starting off. I think now if you get into intermediate, the first one we can talk about is looking for perfect trading system.
Wow.
Yeah.
Wow.
Now, there's a quote that says, I don't remember who says it, but he says, I think it was Robert Precher, the Elliott of guy. He says, many traders, even almost all, they take a good system and try and make it into a perfect system. Basically, what is a perfect system? A perfect system is where you have no losses.
Yep, and it doesn't exist.
That does not exist. Just like any other business, entrepreneurship, you'll make so much losses. And in trading, this is one of them. You just have to figure out how not to lose all your money, but you will lose money. So trying to get a good system, make it into a perfect system. So how your story? It will never exist. It will never. I've not seen any. Gitosh doesn't have one.
Yeah.
You don't have one. Ray Dalio doesn't have one. PTJ doesn't have one. And I think that's impossible to get. What do you guys think?
On perfect system.
Yeah.
I think the problem with perfect system is most traders have not back tested their system. See, so they don't know the downside and the upside of the system. So
when you're back testing, what are you normally looking for in the system?
a lot of things, but let's just focus today on downside and upsides. So let's say losing streaks, winning streaks, a drawdown probability, such things. So a trader has a system. He loses, let's say, 10 trades in a row. He doesn't understand his system can go into such a drawdown. You see, so the moment he loses 10 trades in a row, he drops that system out. He pivots. Pivots doesn't work. Let me move to market structure. You see, system hopping. No, just because your system went into a drawdown, which is pretty normal. If you had backtested your system, you'd have known that, hey, my system at a point in time, I can lose 10 trades in a row. You see. So like the fact that most people don't have data about their system makes them easily move from that system. You see, the moment you have solid data about your system, it's not easy for you to jump from it because you believe in it. You see, but most people now, they don't believe in the system because they've not done back work on it. So someone has been taught, let's say, I think this is a problem with people who get taught trading. You see, for us majorly we were self-taught. You see, so we had to do research, backtest them. So someone comes, I teach him or her pivots. Then maybe it doesn't work for them as they think. Then in a week or two, those 5-10 trades losing trades, they jump from that system to the other system, thinking it will be better. Hey, madness. The other system is now even worse. So jump and say, this system, I have now 20 losses.
Because that's what I tried last year.
Yeah, let me now go back to the other system. You see, let me now find a new system. So that system hopping, just because you don't have solid data about your system, is, I think, one of the greatest reasons why traders don't sit with one system and try to make it as good like let's say about 60-70% good. Yeah.
And we've seen professional traders who found a system. Like now Gitosh, there's no one I've seen who's as confident in his system as Gitosh. And I think you can all attest, that guy, his system, he's done it for the past, I don't know how many years. It's worked for him. And mind you, system is personal. So a system that works for me doesn't have to work for you, because then it comes down to what? Personality.
Yep.
So we all have different personalities. There's some people who are very risk averse.
Yep.
Some people who are risk seeking.
Yep.
So such people, there's a lot you need to dissectify. Break down in order to know, okay, this is how I am, which system goes in line with what I do.
Yep.
Okay, the people who are very aggressive, they like taking trades. The people who go conservative kidogo, let me sit out, let me wait for this to pan out. Yesterday I was talking with Ken, we're talking about feelings and logic, being logic.
Yep.
So Ken is more of a feelings guy. When a trade comes, he can know when the market, okay, this market doesn't feel right.
Yep.
Okay, personally, I'm more logical. I won't tell you this is what I feel. I want to see logical. I have a step-by-step process to look at the markets. This is what it's doing. Now it's able to stay out. So we're all different. I cannot trade the way Ken trades. If I try that, I'm sure, 100% sure, I know myself that well, I'll lose money. What do you think, Ken?
So I think in systems, for me, I won't focus much on like what you guys have talked about, crafting a system or developing a system. I feel like we should first expound on what the system entails. many people focus on trying to find a system which will pick trades, or this is where I'll execute a trade, or this is the trades I'll execute. Very few people think about how they'll manage risk in that system, how they will think about the risk-reward ratios, how they'll think of what's really important, how will you manage money in that system, which setups will you take. Don't focus only on, okay, I'll only be executing these trades. Nope. That's one part of the system. You really need to ask yourself, okay, I'll take these trades, but how much is the risk reward in these trades? Some trades have a bad hit rate, but very good risk reward ratios. And if you really expound on that, you can say, okay, probably I'm wrong 5 times in a row, but the one time that I'm right, I make $10. So it makes sense for me to focus on the risk reward. And that's where most newbies and most intermediate people go wrong. They're very, very focused on trying to improve their hit rate. Like, I'm at 20, I want to move to 40, I want to move to 60, I want to move to 70. So if I'm right 70% of the time, now I'll make money. Okay, that can work. But you can also think about, okay, I'm right 35% of the time. How can I improve the risk-reward ratio on some of the trades that I'm taking? How can I try to make more money from holding trades longer and cutting losses early? How can I craft a system whereby I'm out of trades very, very early? So risk-reward, money management, psychology, we've forgotten all these things when crafting systems. When you lose money, you're very quick to blame psychology. Like Lawi was saying about systems and having a losing streak. One of the things that I've learned with trading is there comes a period whereby your system does not work well. For example, you may find that your trading system is based on going against the trend, but you find that during a certain period, the market has trended strongly.
Yeah.
So during that market condition, your system won't work well. You'll be having a losing streak. You'll keep on losing money. But you need to understand I'm losing money because this market is not doing what I normally like it to do for me to make money.
Yeah. The market is not in sync with your
Exactly.
system.
Those two things are out of sync. So you need to find a way to stay out of the market during such market conditions. That's one. First, you need to be aware of which market conditions won't work for your system. So for example, if you're a trend follower and the markets are just juggling between those two levels, then you stay out of the market. You know that these markets won't work according to how I like to trade them. If you're betting against the trend and a strong trend develops, then stay out of the market because you know this strong trend will make me lose money. So just don't focus on being right or wrong or the factor of I lose money or make money. Focus on other factors in your system. The trading system is not just basically how many times you're right and how many times you're wrong. Focus on other factors. If you can do that, and that's where most people take a lot of time to realize. They lose money, now they're back to fine-tuning the system. Exactly. Now I was drawing this trend line like this. So let me now draw it like this.
Adjust it.
Exactly. I was trading quarterly levels. Now let me trade these levels. I was trading. That way you'll never make any time
System
in markets.
hopping.
Yeah, system hopping. Focus on other factors in the system. Perfect your money management. Perfect your risk-reward ratios. Perfect cutting
Position
losses.
sizing.
Perfect, exactly. And that's how you'll even understand which markets work for your system.
Exactly.
Because there are markets which won't work for your system. For example, like we were saying in commodities, there are very, very high chances of trends developing and those trends being very, very strong with a lot of momentum behind them.
Ignoring all the other factors.
Exactly. Just based on knowing that, you should know that some systems will have a challenge in the commodities markets. So you can probably move from that and focus on other markets. But many people don't think in that way. They just hope
So I
from
think
one thing to the
on
other.
system, the main problem is people don't take time to develop the system.
That's another problem.
Yeah,
So
people
they don't have a system at
People have
all.
a strategy. You see, I can't teach someone how to trade people. That's a strategy. That's not a system.
Thank you. Thank
See?
you. That's a very fine distinction between the two.
That's not a strategy. So that strategy, I have created a system around it.
Exactly.
So I think the main problem is people don't take that time now to
Develop the system.
exactly, like to bring in the different aspects of risk management, psychology,
Yeah.
money management. You see, trade management. So the fact that people like just do the rest randomly is now the fact that they don't have a system. You see, if you have a system, it should be definite. It should be telling you when this happens,
This
do
should-
this, do this, and do this, and do this.
And if it
If this
doesn't
happens,
happen,
don't do this, and don't do this, and
Exactly.
don't do this. So I think people are their trading is too random. Trading should not it should not be random. It should be like systemized. Like everything is systemized. As Gitosh was saying, he has a criteria A, B, C, D. A happens, B happens, C doesn't happen, no trade.
No trade.
A happens, B happens, C happens, take the trade. You see, like you don't have to second guess yourself, do a lot of analysis, which becomes paralysis. You see,
Exactly.
so just like create a simple system and follow it religiously.
Yep.
Yeah.
Because like yesterday when I was going home, I was listening to the podcast. It was you who told me that Peter Brandt was on the.
Yeah. You found him.
So I found him. Now that I'm reading his book and reading his stuff, so I went to listen to him. So he's a pure chartist. So that is a chartist. But he says he's very good in charting, but he's actually right 40% of the time.
Only.
So he says even if these patterns are here to fool you,
Yep.
that's what he talks about. These patterns that are forming, they'll fool you most of the time. So his strategy is using chart analysis. Part of his system is to incorporate a good risk-reward ratio that will now forgo, even if he's wrong most of the times, he'll make money in the long term.
Yep.
So he was totally open. He said, I'm not changing my system. I'm not looking to go to 80%. I know I'm at 40. I'm not looking to change. And this guy's average returns of 40% for the past 40 years, with his highest year making 600%. And these guys are talking of millions and billions of dollars. We're not talking these thousands that he tripled his money. These guys are big guys. So adding up to what you guys are saying with the systems and strategy, you really need to incorporate all that. What Kenna said. So you have understand your psychology, know psychology metrics, get your risk management in place. What strategy are you going to use? Is it VAT? Is it market structure? All that. Now you have to incorporate all that. Money management, trade management. It takes time. That's why trading takes a lot of time.
Yep.
So is that all on systems?
On system, I think.
I think that's all.
But we can do another episode to expound on trading systems.
Trading systems.
So we just talked a little about systems. There's much more into systems. We can do something else. I think some other episode which will be coming soon. Talk about trading systems, how to craft one. I think people also need to know how to craft one. Because I also don't believe you can craft a system without live trading. You need to lose some money for you to craft the system.
And that's why I have some people on my Discord. I keep telling them, please get into live. As in, you'll analyze these things. I keep saying, I'm not ready. Okay, long term used to be like that. I used to think we can take some time on demo and understand when you come to real. I took that belief out of the way. You have to go into real account.
Yep.
Trade real. Understand how that works, and now you can start building from then. Make what you're talking about, your strategy and your system.
Yep.
But if you're on demo and you tell me you have a system, Caleb, give me some money, fund me.
Can't.
Hey, my friend, Tembea, nah, yes. So I think we can also talk now a bit. We can give people some insights because we've interacted with the professional traders, the professional challenges.
I think on the intermediate, there's also a challenge of now. You've made a system. Still, you've not gotten to the $50,000 mark.
Yep. So there's a performance pressure one.
Yeah.
I think you're being forced to perform. You have probably 5,000.
Even for yourself, you see.
Exactly.
Like you want to accelerate your trading career.
Exactly.
So you have $50,000 or $3,000. You still know you're undercapitalized. You're not trading for a living still. So you know you're 5 years into the game. People think you're too good. You see, like you should be buying cars. You see, so you're 5 years into the game. So
there's pressure.
Yeah, there's pressure. So someone sees you have $1 million account, thinks it's a lot of money, but for you,
this is very little.
So little. You see,
It means to an end.
yeah. So like you have some capital. $1 million shillings is not too little for Kenyan. You see, yeah, but still you're not living out of it. Still, the system is not working pretty well.
Exactly.
At least you're surviving. You're managing risk well.
So you're not blowing money.
You're not blowing money, but again, you're not making a lot of money. So you're just in there, up, down. So I think that's also a big challenge for intermediate traders. Like now, scaling up from that $1,000 to $10,000 now to at least getting that $50,000. Yeah. So I think it takes time I think these any amount below $10,000 should be for you to perfect your system. You see, before you scale it up to because nowadays
actually Dr. Brett says the same, just like you've said. Like the purpose of trading a small account is for you to perfect your system and make those small mistakes when you have very little on the line, such that if you have $1 million, you don't have those tiny mistakes that you're making, and you're like, why did I make this mistake? Like you've solidified the whole process of trading. Yep.
Because I think also intermediate, I think biggest problem intermediates face is facing their own demon, psychology.
Yeah, exactly.
Psychology, because you already know now intermediate level, I need a system.
Yep.
So you're working on that. But now fooling this system is now a problem.
Yep.
Consistently, because now you're trying to rewire your mind to follow something that what we're talking about, human nature does not allow you to follow. So you have this system, you have to consistently follow it. Like personally, I'm a trend trader, but I find myself taking corrections. Ask me why, I don't know.
You see,
it's like there's this thing you just need to fight, and that's what we're saying. You have to do it on the real account to face these demons that are inside you, to be aware of them and how to catch them, because you can't do away with them.
You can't.
My demons are my demons. Ken's are his. You can't go and kill them, but you'll catch them and know how to control them. So I think that biggest part. Another thing of also intermediate. Now you have a system, okay? You're still fighting these demons challenges, but now money is coming in, so that killing of money is becoming also a problem.
Big challenge.
Now you're losing. You have, let's say you used to trade $1,000, you've gone to $50,000. You have that money we're talking about, but now in one trade you're losing 1%, which is about $500 on one trade. Your psychology does not. You have to take time to adjust to it. You move from that to $100,000, $500,000. There's that psychological fight. So I think the biggest problem around intermediate is just rewiring yourself, getting in sync with the system, and getting a proper psychology in order to trade profitably and consistently in the long run. Not being greedy, not being fearful, and such stuff. I think once you cross that line, now you enter into the big boys league, professional level.
And I think also the frustration that comes with trying to break those barriers and break some of the patterns that you've developed. So like I was telling Caleb yesterday that when you start trading, the only idea you have in your mind is you're going to be a millionaire. There's nothing that can stop you from thinking like that. Like, I'm going to be super rich. And you start out the game. Already when you start out now, we already filter some people at that level, because there are people now who realize, okay, so it's not going to be my thing. I probably don't like charts. I probably don't like sitting in front of a computer for a very long time. I don't think it will make a lot of sense to be on the computer for this long time, and such things. So we filter out a number of people. But some people navigate it, learn the basics of the market, learn the foundations, craft a trading plan, craft a solid plan to trade with, and they move to the next level. Now the intermediate level. Now this level, the challenge becomes the frustration that comes with trying to make consistent returns, trying to move from trading 5,000 to trading 10,000, trying to have 9 winning months and 3 losing months in a year. Breaking that frustration is not easy, because you already know what you're doing. I feel like you know what you're doing. You know what you need to perfect.
You're aware of it.
Exactly. But it now becomes a challenge for you to break that barrier and move to the professional side now, where you're managing big money and living the life now of a trader, which is what everyone wants. So that frustration is the most dangerous thing. Like I've observed how, like, when you're trading and you start losing money, you'll find yourself maybe deciding, okay, I'm not going to look at charts now. I'm going to be lazy. I'm going to focus on something else to forget my troubles in trading. All these things won't work by the end of the day. If you
and that's what we were talking about yesterday.
Exactly.
You've lost money, you go home, you want to take your mind off it.
Exactly.
You're watching a movie. Let me forget these troubles.
So I want to watch charts again. I'm not trading for the next 3 weeks now. I'm rewiring my
taking
brain.
a break.
Exactly. Those challenges, if you're not able to break past them, then it becomes very hard to move from this level you're in to the next level. Because now your challenge is not learning the basics of the market or how markets work. Your challenge is learning how you personally work, how you manage cash, and intertwining the two to move to the next level now where you can scale, preparing your mind for professional trading, having a good routine for a professional trader, knowing which mental states work for you, which mental strategies work for you. That's the fine level now where you move from being just a trader to being a great trader, where you're making big money and people now can think of you like you're a pro or something. So the frustration in that learning process is something that you must really fight for you to move to the next level. Yep. So that's I think that's it on the intermediate.
I think because the main thing we've just concluded there is psychology.
Psychology,
frustration, all that.
Yep.
Now, once you get into the big league, there's still challenges. Just know one thing in life: whatever level you are, challenges, or no matter how rich you are, how successful you are, challenges will never end. And now, when you get to the professional level, and I think in the professional level, personally, I've gotten most notes or most understanding how the professional traders trade and the challenges they face from the book Market Wizards.
Yeah, the series.
Yeah.
The series of books, Market Wizards, the Hedge Fund Market
Hedge Fund
Wizards,
Market
Unknown Market Wizards, New Market Wizards. Those. So basically, what Market Wizards is it's a book written or a series of books written by Jack Schwager. Yeah.
Yep.
Where he goes and interviews different professional traders who have outstanding returns over the years, may it be in commodities, stocks, currencies, whatever it is. I think we're speculating with Taras yesterday. Taras was saying he should bring one for cryptocurrencies.
Yeah.
Soon enough, people who have traded that. Soon enough, I'm sure it will come one way or another, because there are people who are doing that in the proper way. So we've seen a lot of challenges that people are faced, and also sitting with professional traders like Gitosh, we've gotten to understand that at that level, there are also different and big challenges. And I think the first one that I can get into is scaling capital.
Yeah.
Maybe Taras, you can start on that. Scaling capital now. How basically, what does it entail?
So as we've said, trading is a big money game. If you want to be now a professional trader, you have now to be managing, I think, over $1 million, right?
Yep.
Or anything over 100 million Kenya shillings.
Exactly.
Yeah. So getting to that level, Caleb, who do you know who can give you 100 million Kenya shillings to manage?
No one.
No one. Even no one. You see, so one, I think it starts with building a track record. So you can't scale capital without a track record.
True.
Yeah. So the moment you want to now move from being an intermediate trader to a professional trader, I think you first have to provide a 5-year track record. So I think with that, you can now easily get that $1 million easily. So without that, so I think one of the problems is most intermediate traders have become good. They are managing $100,000, let's say from prop firms maybe. But now
$200,000.
Yeah, $200,000. But now the problem is they want to get to that $1 million mark. You see, with that, okay, with prop firms, majorly they won't ask for your track record. But if you want to now link with investors, circles, with all these people, you'll have to pull a track record. So I think the problem is most traders don't have a consistent track record. You see, you traded in 2016 one account,
Blew it.
2017 another account, 2018 another account. So there's inconsistency in forming that track record. So I think for you to be a professional trader, number one, work on getting that track record. So be patient, be consistent. That's why we're saying, even for us, that's the reason why we've not gotten into money management yet. We're still building that 5-year track record. So the moment we build that 5-year track record, it doesn't have to be an outstanding, like making 1,000% returns, just consistency. And so I think for professional traders, if you want to be a professional trader, just work on getting a track record first. Be patient. Don't rush to make money. Manage your $10,000 for 5 years. Wherever you'll get, now you can present it to an investor. No investor will not give you money if you present that you've been working consistently for 5 years. So I think it's the discipline and the consistency to form a track record that makes most professional traders not scale capital.
And I think that takes time. Yeah, building a track record because 5 years is not a little. Consistently, that means okay, not so much, but you'll see different market cycles within the short-term market cycles. There was a bearish move. It was a bearish market into a bullish market.
You also need to trade all those markets.
Exactly.
Yeah. Yep.
So now you have to know. So understanding all that, then creating a consistent track record on that. When you're changing your facts and the market's change, and you're flowing with that, and you're making consistent returns. Now that's a professional trader. Not Ken keeps saying. There's no genius in a bull market. Yeah?
Yep.
Everyone is a genius in a bull market.
Yep. Don't confuse genius with a bull market. Yeah?
Exactly. Don't confuse genius with a bull market. Just because Bitcoin is going up, everyone can buy. We can all make money. You're not a trader or an investor. You are lucky you're on the right side of the market. Market dropped the other day. Some people bought at the top. Okay? You're not being a genius. It's not. It's hard at the very core. So getting that consistent returns year in, year out, like the Warren Buffett, though Warren Buffett is an investor, if you talk about traders, the Jim Simons, Ray Dalio, such people, it's going to take quite some time. And once you can get that track record, you can easily scale up. Because trust me, we've seen for ourselves, there's a lot of money out here.
Yep.
People have money and they don't know what to do with it. A lot of people. So if you can get into this industry, do what's right, do it consistently like what we're doing.
Yeah.
In the future, it's going to really pay off. So that's, I think, some advice I can give you in this podcast. If you do the right thing and do it deliberately and consistently over the long term, you're going to make money that you wouldn't even knew existed.
Yep.
Yeah.
What do you think, Ken?
Yeah, so I think if you can, personally, I do believe that one of the most important things for you to manage big money at the professional level is for you to trade different market conditions, different volatility levels. Like, for example, I've traded one of the most volatile markets. I think when we've seen the rebound now of oil coming back from $0 to $70 a barrel, we've seen the Dow going up from around 19,000 to 35,000. I think I've seen a very, very fast market. But I've been thinking now, what happens when the markets are slow? What happens when the markets are not creating any new highs? What happens when the markets are just moving sideways? How do you trade such markets? You also need to trade such markets. Then you move down to the fast bear markets, where markets are moving down significantly lower and fast. Trade those markets, understand how to position size in those markets, how to make money. After you've done that and you're confident enough, I feel like that confidence can only come from doing it. It's not something that you can think about. It's not something that you can pretend you have. If you pretend, it will kill you at some point. So you need to be patient. You need to follow the process. You can't cheat the process. And eventually, like you said, there's a lot of capital looking for places to multiply. And a trader's job is to multiply capital.
Yeah, just turning that $1 to $2.
Exactly. That's your primary job. If you understand risk and reward, and you understand how to take opportunities and to maximize on them, then you're a good trader. When that happens, you'll make the big money. But understand that it will take you time. Probably you can't do that in less than a decade. I feel like it's impossible for you to have mastered that process. And that's why we come back to have a career plan. Understand where you're starting. Are you at the newbie level, intermediate, or are you at a pro level?
Yeah.
How do you plan to navigate all these levels?
Go from one step to the other.
Exactly. What evidence are you looking for to mean that you've now moved from intermediate to the pro level? If you don't have that plan, if you don't have that structure that will guide you, it's very hard for you to... It can happen naturally. It happens actually for most traders. But I feel like if you have a plan, if you're more intentional about it, then you can do it faster. You can navigate those steps faster. You can know how to like deal with challenges in both stages. Because like personally, from just listening to different viewpoints, I've picked up things from different places, which I think I need to factor into some of the plans that I had and think about some of the things that I'd planned, how I can review them and how I can change them. Because at the intermediate level, that's when you should try to trade prop for money. That's when you should try to maximize on that capital. Like this is free capital you've been given. Make as much mistakes as you can. Take up some prop money. If you lose 10%, you can still do the challenge again. It's not closed off. You get like you can really run with that and learn a lot. Unlike deciding to pick up people's money who will just stress you, how you promised me this return. Like it should say, uliniambia 10%. Iko happy your 10. Ulisema 10. Iko happy your 10%. So avoid such things. Once you start telling people 10%, be sure you can deliver 20, 30%. Then you can tell people you'll deliver 10%. So you're almost certain you'll fall on that number.
So you under promise but over deliver.
Exactly.
Yeah.
So I feel like if you can do all those things, then you can really, really move far.
Exactly. And it needs capital. Like I think something that stood out, I was sharing with my dad the other day. If you have like now, if this goes back to beginner level or intermediate, start with what you have, the little you have. You can multiply whatever you have into something. What's 1 times 100? 100. What's 0 times 100?
0.
Exactly. If you have nothing, you even if you can multiply it, there's nothing to multiply.
That's a good lesson.
Exactly.
Yeah.
So use the little you have. Don't go start looking for a lot at first. Start slowly. Build that. If you can turn 1 to 100, you can turn 100 to 10,000 slowly. It takes time. But if you have nothing, and another thing, don't just think of it of money. Think of it in terms of skill. If you have 0 skill,
Nothing.
0 times 100, even if like you can't do nothing. So I was sharing with the student the other day, if you have $100 but you have the skill, you're much better off than someone who has $10,000 and zero skill.
Thank you. Because this person with zero skill is going to lose everything.
He's going to give this $10,000 to the guy with 100. It's just going to transfer hands.
Yeah.
You get my point?
Yeah.
So yeah, use the little you have and gain the skill. That's, I think, the main thing we're trying to push over here. Gain the skill and the money will come flowing.
Yeah, of course, we can all agree. If you don't take that time on your intermediate stage to perfect the skill, there's no way you'll become a professional trader.
You won't even go there.
Yeah. The confidence, you won't even have the first of all, I think for you to be a professional trader, and as Gitosh said, I think it was yesterday, that he got the confidence. You see, like he was able to overcome the fear and become confident in his trading. So, and you can't be confident the moment at your intermediate stage you're still not making money. So I think it's the need to be patient and the need to understand that it can even take you 20 years before you become a pro trader.
True.
Yeah, so just focus on creating that system within your beginner level and the intermediate stage. So if you want to cross the other side, please just be patient within this side. The money is not in the beginner or in the intermediate. The money is in the pro. So if you come into trading with the goal of making money, trust me, push it into your pro level.
You can't make it without getting to that level.
Yeah, you can't make it without getting into that level. So intermediate to need just a few $100s here and there. But you can't be rich.
Yep.
Yeah, you can't be rich.
Yep.
Yeah, not even wealth. You can't be rich. So I think it's the need to just be patient, understand the process.
Yeah.
I think most people don't understand the process. At least someone thinks he'll come into trading and by the first year he'll be a pro trader.
Wow.
You see?
Wow.
That's a fallacy. That's a fallacy. That guy is lost. You see? So like you need to first take your first 5 to 10 years. First 0 to 10 years within your beginner and intermediate level. Then now from the 10th year now you can start working. If it has worked, if it has not, push it to your 15th year.
And I think that's why we have an advantage if you do this in your 20s.
Yeah. Exactly.
Again, I also think you can't start learning trading at some
40,
ages. I feel like you're already at a very big disadvantage.
Exactly. You have too much responsibility there. Your mind is just, you're already too hot wired with some things you need to unlearn. And if you're at 40s,
because trading is a performance field, just like you guys say.
It's kafuta too.
Exactly, or music or something.
At
So
35 you're retiring.
you shouldn't come into this thing when you're. But people try, and I don't think we should also. You can be the one exceptional person, but very
There's
few
nothing
people
impossible.
but very few people again can
Stand
just
out.
needs resilience. You see, even for that old person, if he becomes resilient enough,
he can get
he
there.
can make it.
But I'm yet to meet someone live
Who started?
that old age. Well, some exist, but I want to meet and just sit down with them and understand what did you do, because that's really hard. Because there are some people like I think even is it Peter Brandt? I don't know who was reading on the Market Wizards. I think it was John Neto. It was Neto. That guy was in the. He actually says Mondays are his best days. He took some time. He was in the military. He went to the military. He retired. He got some injury in the military, so he had to be fired and all that, or rather retire, not fired. And while he was out, he was already past 30s. So such people, if you read their stories, you'll find a few exceptional people here and there.
Yeah, but I also feel like such people. Their previous background really helps.
I think that's what I was going to say. Because such people, he used to do, I don't know if he was also doing poker or anything.
Yeah.
But
you may find there's
some skills he had already learned early on that helped him in that trading when he retired.
Yep.
So, and then I think another problem we should talk about on professionals that Taras was sharing with us over here is pure investor knowledge.
Pure, I'm a lack of.
Poor investor knowledge or lack of proper investing knowledge. So for example, this is also what leads to the other problem, the risk of falling short. So many people, I think they enter into, so now you're a Forex trader, let's say we've become into a professional level and now money is coming, but this investor who wants to give me money does not understand how the markets work. So they're looking for these ambitious, crazy returns.
Yep.
Okay.
Yeah.
And I think that's why in America, you cannot get money from anyone unless you're accredited investor.
Yep.
Yeah, exactly.
Yeah. So this person has to be educated about how the markets work, such that when they give you money, they're not putting pressure on you to make some crazy returns. And even if we're not even looking only on the upside, if they make a loss,
Yeah.
They understand the
you
risks.
understand the risk that is in
Yeah.
it. But if someone just gives you money and tell you shika $1 million, and you tell him there's risk in this thing, he'll tell you, I understand. Okay, you take it. Okay, this person, trust me, at the very core, they do not understand
risk.
It's just that they don't know what to do with that money.
Yeah.
That's why they give it to you. And I think this investor knowledge is something which we're also pushing to raise awareness. Okay, so we're not only pushing to teach you how to trade, we're pushing so that if you give someone money, we've seen many people come to our office saying they were conned, interweb, VIP portal, such people saying they didn't understand what they're getting into. Okay, so now we are here also to tell them, here's our book, or here are YouTube videos, here's some knowledge. Go and read that, go and watch that, get some knowledge about this industry. Look at the normal returns we're normally looking for. For example, if you get into real estate to buy shamba today, you will not want to sell it in the next 2 months.
Yep.
Why do you want to become a rich or a wealthy Forex trader in the next 2 months? It takes that. So you understand what you're getting into. Many people understand shamba, but coming into investing, nothing, zero, nada. But they want to make a lot of returns. So I think that's my point on that.
Yep.
Yeah, that was pretty clear. I think it's the fact that it's a pretty new industry. See, most
Especially in the Kenyan
yeah,
market.
especially in the Kenyan market, like most of the investors who are, let's say, above 40 years, what they were used to was stock markets, like NSE and stuff. They don't understand forex market, currencies. So I think the fact that
And cryptos.
in crypto, you see, the fact that they don't have that, it's pretty new to them. No, actually, not pretty new. They don't even know it. You see, it's us trying to tell them. Like, are you going to tell your, let's say, your auntie, your uncle, who is maybe wealthy, you tell him, hey, give me like 10 million shillings. I do forex. Hey, that man will be scared. Hey, hii pesa unaenda kuweka wapi?
Yeah.
Hey, ati kwa broker. See,
Inafanya nini
exactly,
huko?
they don't even understand the dynamics. They don't understand the risks, the returns. You see, they want you to bring 70% return per month, like that. Your man Abdullahi.
Yeah, I'll give you that story. Abdullahi.
I remember that guy. It's like who came to the office.
And he's serious. He'll say, I mean, I have millions. He's
have
serious. I have
millions.
millions, but I want 70% per month.
Per
You see?
month.
And he's rigid about it. That man, most probably, he lost those
But
millions.
remember, we tried telling. Okay, but you'll tell that story. Yeah.
Yeah, Kay will tell that story. So I think the fact that also I think the social media, you see, like even for our friends,
Yeah.
they come and tell you, hey Taras, if I give you 200k,
How much will you give
how
me?
much will you give me? You see,
If you tell them we'll give them 10K, they don't want it
they
anymore.
don't want it. You see,
Tell them 10%.
10%. I'll give you like 10k iko sawa. That guy says you're conning him. You see, yeah. So like proper, like lack of proper investor knowledge, and I think that's a niche that we need to cover seriously. Like, we should even be having conferences to just educate investors on how to understand returns and
What
risk.
to look out for.
Yeah, what to look out for. Yeah, like red flags also. You see,
Exactly, yeah. Not to get conned.
not to get conned. Yeah, I think we
Because if you
should,
see someone just telling you 200% return after, or even those, what Ken is saying, 70, what Taras was saying, 70% in a month, that's a red flag already.
Yeah.
Like, I remember a friend of mine sent to me. Remember, Ken? We actually said we'll share it.
Yeah, I remember.
Remember?
Yeah.
Yeah, let me just look for that text and just show you a little bit red flags that we can share with you here and that you can look at. So my friend sent me this. So, greetings, Geoffrey here with FX whatever. This company allows you to earn profits with every investment. I do manage account for individuals and do trade on behalf of my clients. Bitcoin is one of the major and most. So they try and use some terms that you won't really
Confusing
understand.
newbie. Yeah.
Exactly. So here's part of the red flag. So if you go down and read it, being aware of the financial constraints and the troubles trying to trade binary options, we have been able to discover how to mine and trade Bitcoin with no loss strategy.
How is
So
binary and
under
Bitcoin related?
this is just confusing. Mining and binary is totally different.
Yep.
And a red flag underlined there, it was saying no loss strategy. That's already a red flag. That
There's no
helps me
strategy,
win
okay.
95 to 98% of my trades. That does not exist. With a minimum of $260
Only?
only.
Yeah.
Your financial problems can totally be put to rest.
Hey, madness.
This is just crazy. Another thing they
The
said,
peddling it has financial problems.
another quote, another thing I just circled and told my friend, they were saying, it was saying here, note, the minimum deposit is $260, that is 28,500 Kenya shillings, which yield total profits of $720, which is 82,000 in 6 hours of trading.
Only.
That guy tripled that money. Or
In
is it
6 hours,
quadruple?
he's tripling. Every 2 hours, he's making 100%.
Hey, madness. You see?
So
Madness
these
of
are just
crowds.
red flags what we're talking about. What Taras is saying, we should have conferences or seminars or workshops where we can be going through all this and giving people knowledge. And once we do that, I think we'll help the industry grow, because money will stop flowing into dumb and
Wrong hands.
stupid wrong
Yeah.
hands into the professional hands, which is, watch us in the next 5 years. We're working Financial Hub with Michael Gitosh. The industry is about to be changed. There's a lot coming that's working chini ya maji that will really change this industry and what is it called? Differentiate, part this Red Sea
Yep.
and put the unprofessional people on one side and professional people on the other side. Yeah, so that was to add on to the poor investor knowledge.
Yeah, so for me on investor knowledge, I feel like, first of all, I think on the African market, like if we come back to Africans as people, we still don't understand financial markets deeply. So there's a high chance for us to understand financial markets deeply. It's our generation, like when us guys are old, like when you're in your 50s, 60s, then now someone comes and pitches to you an idea on markets, you can probably say, no, this is wrong, this is right, because you understand markets.
Yeah.
But right now, if you try and raise money from people, the dynamics of what they'll tell you or what they'll want is quite difficult. So like you were saying, there was this guy I met some time back who I sent to my track record. So it was very attracted to it and decided to pay me a visit to the office. So the guy says he wants 70% return on a monthly basis. That means if he gives me 1 million before the 30 days are over, I should have 1.7 million.
And after that,
And after that, I should have 2 point something million. After that, I should have 3 point something million. That's quite impossible. I feel like if you aimed for such a return annually and you attained it, which is quite a stretch also, you're doing exceptionally well. Like you're one of the few great traders we've seen. On the Market Wizards, I don't think there are people who match such track records. All the people who are there,
making what?
70%. The people who are there match such track records.
Okay,
Like
and those
they're
are very few.
very few people. Like this guy actually filters out very many people for him to arrive at choosing just those few people who are so exceptional in trading. So one, there's that training that's needed. Like Lavi said, we take people through the process of like educating them on how markets work, the returns that are possible, the risks involved,
Where to put money,
where
not
to put money.
money.
Exactly. Because I also think the objectives when you're investing are quite different. For example, in your 30s, 40s, you're investing with the objective of growing capital. In your 60s, you're investing with the objective of saving capital. And it's not so much about the return. It's much more about, is my capital safe with these people or in these hands? Once you understand such dynamics on how markets work, then it's even easier for you to craft investment products and for which you can peddle to people. And for the people who are buying the products now, they can understand what they are buying. So we really there's a lot of work that's needed to be done on that aspect also. Like the investors have to understand, okay, this is an opportunity, how it really works. Because like I've been thinking about, if only your parents understood the value of trading or the power of trading, they will support you 150% in that endeavor. Like if they really understood what it really means to be a good trader, no sane person will not support you in that journey. But unfortunately, many people don't understand it.
That's not the case.
That's not the case. So I feel like there's a very big gap in that market, and I feel like that's also what we're trying to do. with the education products. Like we said, we can actually come up with an investor knowledge product which can actually teach people.
Because we have, you remember, we have a seminar coming.
Yep.
In July, we're going to share about just knowledge.
Yeah, knowledge on markets, your objectives with the money you're trying to do, with what you're trying to attain with your money. Are you trying to grow it, save it? Are you trying to multiply it infinitely?
Yeah.
So there's a lot that needs to be done in that space. But I feel like with time, things will shape up. But there's a lot that needs to be done.
We have a long way to go, yeah?
Yep, before we get to the other side. A very, very long way. And it's still relatively new in Kenya. So if you try to raise money right now and you tell them you're trying to trade, there's a lot that people who will give you money don't even understand.
Yeah.
So...
Because for us, like, we're trying to build the benchmark such that when people come, you have a reference point.
Yeah.
Like, okay, Ken did this. Now, let's say a student who's just finished Form 4 can tell the mom, it's an industry. Ken has done it.
Exactly.
Look what they're doing. They're up there at the front.
Exactly.
Before us, when we were doing it, there was no one to tell our parents or anyone around us, there's this person in Kenya. All you're trying to do is just show his story to, like what Ken was sharing the story with, what he was telling his dad, someone trading. It was how much?
About $100,000.
Exactly. 10 million Kenya shillings. They say they're impossible, but if you actually see someone doing it here in the country, there's a benchmark where people can look at and say, okay, this is a new industry coming, and there's always the forefront. What do we normally call that process? The when something new comes, the technology, the one that has laggards at the end. What's the first step? Early adopters.
Early adopters,
or the inventors first. Yeah,
there's the inventor, and there's the early adopter. Then the early adopter passes it on to there's the early majority, then there's the late majority, then there's the laggard, I think, at the end.
Yeah.
So the laggard is the last person to realize there's something here. But the inventor is the first person to see an opportunity. And the inventor, it's like it looks like a distribution. Most people are at the middle, early majority and late majority. But the inventors and the laggards are very few.
Exactly.
And that's why I feel like entrepreneurs are very little, and those who succeed, because there are very few people who can see an opportunity before others see it. When everyone sees an opportunity, realize that it's too late, I think, for you to capitalize on that opportunity.
Exactly.
But when very few people can see it, you can probably go into it.
A very good example is like what we were sharing on the social media, the Winklevoss. They bought Bitcoin back in 2012-13 when it was at $8.
Yep.
When there was no one talking about it.
Yeah.
There's some people who even did it before. Because before people like Winklevoss started coming in, people who saw there's something here and they betted on it as an investor, they're the people who are acting on the Bitcoin system itself, the blockchains, and they're working on upgrading it, removing bugs. Those are the inventors now, the early adopters and the innovators. Now, fast forward to 10 years later, where you can walk on the street and hear someone telling you, Shoeshine, Mama Mboga, hey, umesikia Bitcoin?
Exactly.
Heard of Bitcoin?
It's already too late.
It's too late. It's at $60,000 when this person was doing it at $8. These people are now just coming out. So it takes time. And whatever you're doing, now this is just general advice, whatever avenue you're getting into, even if it looks really new, like us, what we're doing Forex, when we started it, there was no one to say, but we really stayed focused and said, this is what we're going to do. So really, really be resilient and persistent with whatever it is you're doing, even if there's no one doing it. Look at Beeple, for example. This guy called Beeple, he was making art for 10 years plus, just digital art. If you go on Instagram, you can get him, Beeple, Beeple, and another name, so Beeple. If you just search that, you'll get him. For 10 years online, he's just doing a lot of digital art. Later on, he was the person who sold the NFT, the non-fungible token, for $69 million. That was not overnight success. That was a 10 to 13 year overnight success. Okay, so it takes time, and be resilient and stay focused with what you know. So I think we've any other points? We've stretched out most. Maybe if you do a part 2, we've stretched out most of the points. Yeah, that's on the professional
licensing.
Yeah, I'm saying that's on the professional challenge.
The professional challenge, yeah.
What about licensing?
That even with a good track record,
still need a license.
Okay, yeah.
Let's say you have a few investors here and there. If you want to scale up your investments, we're not trading it doesn't, like, there's no roof to it. You can manage billions of dollars.
Much
you see.
money.
So the moment you now have a good system, good track record, a few investors, let's say 10, with let's say 10 million each, now you have $1 million. You see, you're still not at the epic, like at the pinnacle of trading. So, and that's where now CMA came in 2017 with regulations, money managers regulations, brokerage regulations, fund managers regulations. So it was basically to at least open doors for professional traders. I think right now the only licensed trader is Mansa X, and we are waiting for another one. So only two, you see. So there are only two people, two companies that have proved themselves that they can manage public money. So trading for a few investors here and there, that's not trading public money. Now when you trade public money is when you take money from circles, university endorsement funds, central banks, banks, other banks, from unit trusts. So to get to that level where you're now raising money to at least get to at least $1 billion is now the pinnacle of trading. I think that's where if you want now to say you've maximized on your skill and talent, is when now you're becoming a licensed trader. So I think most, like, I think I only know one person who has tried to get to that level. So I think it's one of the biggest challenge for most traders. Like we don't have the power, the resources, that like the track record to be licensed by CMA to manage public money. So I think
and even if you have, it's again another process.
It's a tedious
the
process.
Person we know who's doing it taking over a year,
trying to just get licensed. So like, see, it's at least for them now, they're trying to make it hard for because imagine now there were no regulations. People would be conned massively, bro.
They were conned.
So exactly, people were conned massively before the regulation. So I think with the regulations coming in, it's like it's a good thing and a bad thing, but it's more of a good thing.
Of course, because we can amend it as time goes.
In as much as it limits you to scale that capital, it's how do I put it? It's worth it to work for it and get it. So even if it will take you 2 years, 3 years, even if it will take you 10 years, 20 years to perfect your trading and all that, then you go for the license. It's really worth it, because imagine with a license you can manage about $1 billion.
Even more.
Or even more. Let's say you start and you're managing $1 billion. Now that's being wealthy. You see, the goal of trading is to dissect it to every point that, like, understand I'm at this point and that is where I want to go. See, the moment you know you want to be a licensed trader, you'll be a patient trader, work on your trading slowly, see, because you know your end goal. So I think it's a really good thing that we've managed to work with one person who is getting the license.
Exactly.
So I think we'll learn a lot from him, and probably, if God wills, we'll also work on our license. Eventually,
one day, one way or another. So I think you've talked much about that licensing process and the challenges. So I think we've covered mainly the broad aspect of most things.
Beginner level, into the nitty-gritty.
Not
understanding risk.
Let's just take that as an introduction into challenges. The challenges are endless.
They're endless. They have brothers and sisters and cousins.
It's in deep and girlfriends. And but anyway, so I think that's it for today. I think before we end, as we said, as usual, we'll be having a financial fact that we can be educating you guys on, so that you can learn one or two things. I'm sure you're already learning a lot, but the main we can be giving some financial fact that are unknown, that we can be sharing with you guys. So I think Ken has one. Ken?
So today we're going to look at markets. So basically this podcast is about markets, how markets trade. And I think it's important for us to understand markets from a historical perspective. So since 1928, the Dow Jones has increased more than 10% in a day. How many times? Only 8 times.
Increased what?
More than 10% in a day. Only 8 times. Declined more than 10% in a day. Only 4 times. and gone either up or down more than 5% in a day, more than 136 times.
Oh, that's interesting.
That's interesting. So if you see the market down more than 10% or up more than 10%, that's an anomaly. So you should try and find something. Either you bet on the trend or against the trend. Which one do you think should be the right decision?
The trend.
Why?
It's your friend.
That's a decision you have to make up for yourself. Whether you
Sure.
bet on the trend or against the trend, ultimately what matters is how much money you make or lose.
How much money you risk?
Exactly. So think about it and think hard about it. I think that's where we'll stop today.
Yeah, I think that's it's been a good podcast.
Yep.
Very interesting
This is a
one.
good- Interesting one. Hope-
Next week we'll have a guest. On the 3rd episode, we're having a guest.
Yeah.
M&M Asset Management. A good friend of ours is also in the money management business.
Mhm.
Yeah.
We'll be talking a little about the challenges and many other things. So wait for that episode also.
Yeah. So that's it from us, guys. Taras, that's all. Yeah.
Yeah, that's all. See you next time.
Yeah. We'll see you
Enjoy
guys.
the podcast, and I hope you've learned enough.
Mhm.
Pick the
Develop a plan.
yeah,
That's
and
it,
don't
that's your
give up.
advice.
Those
advice.
challenges we've said we all faced them. No one has missed them.
Mhm.
I think everyone here has blown an account. Everyone here has been depressed about trading.
Yep.
Mhm.
Everyone here has looked for money in the weirdest ways.
More stories to come.
Yeah, more
Yep.
stories to come. So just don't give up. We are not there yet. We are still working through these challenges. You see, as you can see, even the pro have challenges. So
Yep.
we are ready for that. We are gonna soldier on, and I hope we'll pick a few people to go the
Along the
journey
way.
with. Yeah.
Yeah, so that's it from us, guys. See you next time on our next episode. That's it from the Traders Podcast. It's your most interesting co-host, CK, alongside your less interesting co-hosts, but smart boys, Paps and Taras Lawi. So that's it from us, guys. See you next time.
Bless you.